still hear me? Let's make sure everything is set to go. Oh, okay, awesome. So, okay, uh, this presentation is going to be on this class or whatever you want to call it. So, it's going to be on cryptocurrency investment, cryptocurrency basics, investment, trading. No, not much of trading here. Maybe another class, but more of investment. So, let's just have a quick look at the contents. So, we have our introduction, we have Bitcoin, an electronic P2P cash system, then what problems the Bitcoin set out to solve, a brief history of Bitcoin through the years, how a Bitcoin transaction works, just basics. And we move to what it means to invest in this space. So, in the introduction, yeah, okay. So basically now what we want to talk about is what are cryptocurrencies. So cryptocurrencies basically are just a medium of exchange. They use some form of cryptography to ensure the security of financial transactions. So what that means is that's just complex stuff, but what it means basically is cryptocurrencies are just a medium of exchange. Same thing as your money. When you have a banknote, essentially that banknote, your naira note, your dollar note, your pound note, they're worthless. Basically, the only thing that make them worth something is because if I take this money and I say, oh, let me give it to somebody, let's call that person Ashraf. If I give that person this money, you understand? It's only because we've both accepted that this money is worth something. That's why you can use it. I can collect it from you and I'll give you, let's say, my PS4. I don't have a PS4, but let's just say my PS4. I give you my PS4 and you collect 5,000 naira from me, or $5,000, or $100, or whatever you think it's worth. So cryptocurrencies came to, Bitcoin, especially Bitcoin, the first one, came to mirror that. So cryptocurrencies now, they use blockchain technology to achieve some unique properties like decentralization, transparency, and irreversibility. So now I won't dwell too much on this. This is just introduction. Let's just keep this in mind. We'll talk more about this later. So, I just mentioned blockchain technology. So what's a blockchain basically? It's just a decentralized ledger that records transactions in a chronological order. Chronological order means you're starting from the oldest transaction to the newest transaction, basically. So if a ledger, what's a ledger? A ledger is just, I don't know if you've ever seen people in a shop where you have a shop, you will surely keep your record of transactions here. So somebody bought Chivita, you sell Chivita, somebody bought Chivita, you record it. The person paid you 200 naira and exchanged one Chivita with you. So you record that. So whatever that book that you have where you record that is called a ledger. So what a blockchain is just a decentralized ledger, a record of transactions, basically. So it records it from the oldest transaction to the newest. So I think I might be repeating myself now. So I'll move on. So let's move on to Bitcoin. Bitcoin, an electronic P2P cash system. So P2P here means peer-to-peer. So what is Bitcoin? How did it all get started? So right after the economic collapse of Wall Street in 2008, a pseudonymous person or group of persons. So basically, we don't know. The creator of Bitcoin is unknown. We don't even know if it's one person or a group of people, but it's named Satoshi Nakamoto. So he published the Bitcoin white paper. So the white paper is just basically like like a research. It looks like a research paper. I don't know if you've ever seen a research paper, what it looks like. So the white paper, I think I even maybe let me share that screen. I currently have it open. Let me just to be good for those that have never seen the Bitcoin white paper, it will be good for you to see it now. Okay, so let me share this. So okay, can you see my screen? Can you see my screen? Oh, okay, you can. Okay. So basically this is the Bitcoin white paper. Just 9 pages. You can see the name Satoshi. Hello? Okay, let's see. Okay, I'm coming. Okay. See it now? Oh, much better, right? Okay. So this is the Bitcoin white paper. So you can see you can see it's very simple, very unassuming. So you see the Satoshi, you see his email, see everything, and just put his abstract, everything. So it just came from nothing, really. Didn't really. So, but let's move on. Let's move on. So, I just wanted to show you for people who haven't seen it. Just the 9 pages describes transactions, how they're going to be, timestamp, proof of work. So for those who know what proof of work is, but we'll still explain that. The network, how they're supposed to run, everything, yada 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 yada, like that. You understand? So privacy and every other thing. So let me go back to the presentation. Please let me know if you can see this screen now. Presentation screen. Can you see it now? Oh, okay, okay, please. That feedback is let me so I know it's we're still good to go. So okay, so he created this he published the white paper, and it was just presenting like what the future of Bitcoin was going to be. So basically during this collapse, I don't know if people have watched movies like The Big Short. You see, maybe able to get what really happened during the collapse of 2008, especially in the US. So the banks they had borrowed, they're taking people's funds, they had been placing huge bets, doing a lot of rubbish, leveraging on the fact that they were not really being monitored properly. So this misuse of this system led to loss of millions of jobs and a full-scale collapse of the financial system, the economy, everything like that. So thousands of people had their life savings in the banks. They lost some or majority of their funds. They lost some or majority of their funds. Then this single event led to Satoshi creating Bitcoin, which was made to be decentralized. Now, I think let me explain what decentralized means. So, decentralized means it's something that is not controlled by any single entity. You understand? So, even Bitcoin up to today, there's no one single person that controls it. Bitcoin is basically a network of people and computers. Then it's also trustless. Trustless meaning it doesn't require, I can do a transaction now with David. I don't need to trust him to do that transaction. That's the way Bitcoin has been built. So let me move on. So what problems did Bitcoin set out to solve? Did the guy just make this thing to make money, or what was he trying to what was he trying to solve? So the first problem, double spend problem. This was a very critical problem for Bitcoin. This was a very critical problem for Bitcoin because what happens is with we have the PayPal's, we have the Mastercards, and even if you look at your bank account, if you look at your bank app, you let's say you have 20,000 naira in your account. The major problem with digital cash payments of then, and there were quite some since the early 90s, since when the internet started. So the problem then with digital payments was, how could you verify that this money has not already been spent before? Because if you say a money is digital, in quotes, why can't I just copy that money? Let's say I have $100. Why can't I just copy that $100 and paste it somewhere else? Do you understand? How do I ensure that that somebody cannot spend money twice? If I have $100, I give David $10, I should have $90 left. I shouldn't be able to spend $100 again. So that was one of the issues that Bitcoin set out to solve. The second one was the problem of security of wealth. So when you look at what I mentioned with the economic collapse and people losing their funds because banks made huge bets and some of them had to be liquidated, some of them they went bankrupt, and so many things like that. So the problem was, you realize that your money that you have in the bank today, it's not really, it's yours, yeah, but you're not really in control of it. For example, we know if those of us who know about the Nigerian Civil War and even so many other countries in Russia and so many other places, the government officials can freeze all your assets, freeze all your bank accounts. So you don't really control the money you own. So that was one other problem that Bitcoin set out to solve. When you own Bitcoin, you're the only one that has access to it. So let me move on. So the third one is transparent transactions in a trustless society. So by nature, human beings are very deceitful. Yeah. So they always every most people have it in to scam or dupe one way or the other person. So what does Bitcoin solve, or what did it set out to solve? How did it set out to solve this problem? That's how the blockchain was created. So the blockchain, as I said, is a ledger, decentralized, and those terms are very important. So decentralized and is a transference record from oldest to newest, from oldest to newest, you know. So that transparent record ensures that one thing is the decentralized nature ensures that everybody has a copy of that ledger. So if everybody has a copy of that ledger, I can see if I say I send money to David, if you should see it there because you also have a copy of it. Do you understand? Then the trustless society part is, as I've said before, you do not need to trust somebody to do a transaction with him. You understand? So those were the major. There's some other problems too, but those were the major problems that Bitcoin, in my opinion, set out to solve. So now let's go into some history. I really like history. So history of Bitcoin. So we have from the beginning. So we have the announcement of the white paper. So that was October 31st, 2008. The Bitcoin white paper is published. So Satoshi posted it, I think, on a forum, a Bitcoin forum. I think maybe it even still exists till today. So they published the white paper, and that was how everything started. So fast forward to I think this is how many months? Is about 3 or 4 months later. So the Genesis block. What's the Genesis block? Genesis block, in the blockchain, we have blocks. So those blocks are connected together. Those blocks, each block contains a list. Each block is just basically a list of transactions. You understand? So it's just like transactions that go on for, I think each block now it's about 12 minutes or something. So each block is transactions that have happened over the last 12 minutes. Somebody gathers all those transactions and after that time passes, the person puts a stamp on that transaction, and you cannot, that's after once that stamp is placed, the transactions cannot be changed. You understand? They cannot be changed. So it's going to be there for life. So the Genesis block, which is the first block, was the first block to be mined. That was mined in 2009. So we have fast forward to January 12, 2009. The first transaction is completed. Then Satoshi mined this first block, by the way. So November 6th, 2010. That's about, let's say, almost 2 years. Already Bitcoin hit a 1 million market cap. So that means the total value of the Bitcoin that were created at that point were valued at $1 million. Then we move on. October 2011. October 2011, the first fork of Bitcoin. So Bitcoin forks for the first time to create Litecoin. So a fork is when, okay, I think I'll save this till I get somewhere else. I'll get somewhere else in the explanation. Let me save it. Let's just hang on to that. So let's just move on with the history. We have in June 2012, Coinbase. I don't know how many people know Coinbase. Does anyone know Coinbase? Coinbase is one of the biggest exchanges for cryptocurrencies. If you want to buy cryptocurrencies, so Coinbase was launched. So one thing, if you really look at this now, one thing you might notice is when Coinbase was launched, Coinbase enabled people to buy cryptocurrencies with their cash, with their dollar, with their pound or whatever. So it really accelerated the valuation of Bitcoin. So that's what began to make people really the price and the value of Bitcoin to really rise. So okay, let's move on. So continuation. So by December 2013, Bitcoin hits 1,079 actually. That was the all-time high at that point. So from that point, people, the interest has been rising. Interest has been rising so much in Bitcoin, and that's why it hit this all-time high. Then we now move on to this. This was one of the defining events in Bitcoin's history, which was Mt. Gox. Mt. Gox was one of the biggest exchanges at that point, and it gets hacked. So it got hacked by some hackers, and it led to about, I think, was it about $200 million then? It's actually worth much more now. Were hacked, and it led to a crash in the price. I think the price crashed about 80 or 90%. Okay, I should have even put that here, but let's just move on. So another fork of Bitcoin, to Bitcoin Cash, that was happened in August 1st, 2017. In December 2017, the first Bitcoin futures contracts were launched. So this is very, very important. I think for me, then I got into crypto around 2016, early 2016, but I didn't really start trading till 2017, mid 2017, around this August time. So this was very, very important because this solidified institutional, in the financial market, we have people institutions, all them, people that are really big, like them Warren Buffett and Wall Street. So this signified, institutional interest. People were beginning to realize that, oh, this Bitcoin of a thing is really valuable. So they began to trade futures contracts of Bitcoin. So let me just give a quick explanation for those who might not understand futures contracts. Futures contracts are just they're a kind of financial assets, which is just like paper. So it's just like I have a contract. I think we should all know what a contract is. So the futures contract is a contract to buy something in the future. So for example, let me use crude oil for example. So everybody buys crude oil, uses it for whatever purpose, refining, whatever. So I can buy crude oil that they will deliver to me in 3 months. So what they will give me is a contract, which is a piece of paper that says, oh, I own so tanker of crude oil, or I own so maybe 1 bar of gold. So that paper, anybody that holds that paper owns that gold or the crude oil, and I can sell that paper or buy that paper from other people. So that's just what futures contracts are, basically a paper that shows that you own something that will be delivered later in the future. So it really solidified institutional interests in this. So let me quickly move on. So all-time high, December 2017, and I think this was when most of us began to hear about Bitcoin. Bitcoin reached the all-time high price. That was done. So quickly, and this was followed by a lot of people, jumping in on the hype. They didn't really understand, but they just saw, Bitcoin is going up. Let me buy. You understand? So because of that, this is what now happened: the crypto market crash. So because a lot of people jumped in, they didn't know the value, they didn't know. Everybody just so let me buy, let me buy, let me buy. It's going up, it's going up. Let me buy. I will even like me if I bought. So that's how it was. So now let's go. How does a Bitcoin transaction work? So this is the fun part. So on the Bitcoin network, if someone requests a transaction, let's say I want to send, I have 5 Bitcoins. I pray. I have 5 Bitcoins. I want to send 2 Bitcoins to Tosin. Tosin is a fictional person here. So that's, I don't know if you guys can really see the text. I don't know. Hope it's not too small. So that's message. It's like I will say on the network. I will say I want to sell this, or I want to transfer this to somebody, and it's broadcasts on the P2P network. So to computers known as nodes. So it's broadcast on the network. So that network of nodes, they now validate that transaction using, there are some algorithms and that's what all the cryptography, but I'm not going to bore you with all that. That's what it's all about. So they use that cryptography, and the people that do this work are called miners. That's why when you hear Bitcoin mining. So that's what it is. So there are people who basically collect all these transactions, and remember that stamp I was talking about earlier in the class. So they collect all these transactions, they put a stamp on it, and basically what they're trying to say is this block or this sequence or this package of transactions are valid. So those are only valid blocks that will make it onto the blockchain. So here now, as you can see, here in this infographic, the yellow blocks are the valid blocks. Do you understand? So that green block now you're seeing here is the one that's about to add it. So the yellow blocks can only be valid when the miners have put that stamp on it. So they use all their cryptography rubbish to do it. So once verified, the transaction, combine it with other transactions and create a new block on top of all the other existing blocks. So that, and that's what they say here. You can see here. So the new block is added to the blockchain. It's permanent, it's unalterable, and once that is done, they put a stamp, it's complete, and it's broadcast all over the network. So basically, that's what it is. So in of itself, you can see this part. Cryptocurrency doesn't have any intrinsic value, really. It doesn't have any physical form. It only exists on the network. It's just numbers. But it's because people believe it's worth something. That's why it's worth something today. And worth, I think, as at last I checked, 11,500 or 600 and something dollars. You can imagine how much that is. So its supply is already fixed. That one has been fixed in the code, and it's completely decentralized. So let's move on. So how does it work? As I said, this is just a rehash or recap of what I already said before. The miners create Bitcoin. So for each, yes, okay, something I didn't add. For each block that's created, and for each miner that puts a stamp on the block, is given a reward. You understand? So for each transaction, you pay a fee so that you can get your transaction complete. So that those fees are gathered, and the miner is given a reward of some Bitcoins plus those fees. So the way they do it is they try to solve a very difficult mathematical equation which involves the block. And I hope I'm not losing anybody. Okay, so they try to solve a very complex mathematical equation, everybody's trying to solve it. So the first person to solve it is the person that gets that reward. I think before it was about 100 Bitcoin. So every few years the thing is halved. So now now it has halved about 3 or 4 times. So I think we're now on 12 and a half Bitcoins for every block. So you know, then Bitcoin exchanges, now we have Bitcoin exchanges where they trade. You can trade your naira, trade your pound, trade your dollar, and you exchange it for Bitcoin. So those miners now, when they get this reward, they can come to an exchange and sell it and use it to pay for their electricity, pay for their advanced computers that they use to mine and everything like that. So also businesses, individuals create wallets that allow people to send Bitcoin. You can have a wallet if you have a company to a business. People can pay you. Many people actually collect cryptocurrency as payment. So that's that. So cryptography now secures the whole network, ensuring everything safe. So new kid on the block. Everybody has heard, or maybe not everybody, but I think most of us have heard of Ethereum. So Ethereum is another cryptocurrency, but it's a bit different. So what is Ethereum? So like Bitcoin, Ethereum is also a public blockchain network. But what's now the difference? So Ethereum functions like what you call, I don't know if we all know what a supercomputer is. So it's just like a supercomputer, but it's made out of code. They've really coded Ethereum. Then it has what makes it special and what makes it different from Bitcoin is it has the ability to run applications on top of it. So that's what it is basically. You understand? It's just a platform or a network or a computer, all those together, network, computer, everything, because it can run code, it can connect to other computers and things like that. So what it does is that anybody, even you now, if I want to build my coin today, I say call it Timmy coin or Arrow Capital coin. Maybe we'll get there one day. So I can build it on the Ethereum blockchain and run it on it. So many coins that we know today are built on Ethereum blockchain, or most of them started on Ethereum blockchain before they even built. So what is the main what did Ethereum set out to do? Basically, Ethereum in the network here, the miners work to earn Ether. So Ether is the currency. Ethereum is the network, and that's one thing we must be able to separate. Ethereum is the network. Ether is the currency that allows people, that's what is actually worth something in the network. It fuels the network. So what do they use? So why is it valuable? Ether is used by the people that when you want to develop on the Ethereum network, you want to develop your coin or your token or whatever, you pay anything that you want to do on that network. It's powered by Ether. So that's why you see it's so valuable, and that's why you see it's going up so much. Because anybody that wants to build on that supercomputer in quotes has to pay for transaction and services using Ether. So Ether is one other thing that I should have added to this slide, which is not here, is what they call smart contracts. So Ether is a supercomputing smart contract platform. What does that mean? Basically, it has the ability to run. Let me see how I can explain this as simply as possible. It has the ability to run code which function like contracts. So what does that mean? Let me give you an example. Let's say I want to buy something from you. Let's say I want to buy FIFA. Let's say FIFA, the computer game, video game, FIFA 20. You sell FIFA 20. I want to buy FIFA 20 from you. So what happens is Ethereum network can work out a contract that monitors that when you transfer me that FIFA 20, maybe, and nowadays you can get FIFA just by getting the code and you download it. So once you are selling that FIFA, once you send me that FIFA, the Ethereum network can be monitoring that transaction, that once you send me this, send whoever is selling that FIFA, send the person 1 Ether. Do you understand? So basically, if this happens, do that. That's how it works. That's what smart contracts are. If so event happens, do that, do that, do that. And it can get more complicated, but that's for those that develop it, not our problem. So okay. So Bitcoin and Ethereum, what's the difference? So Bitcoin is using one application of blockchain technology. There are many applications. So Bitcoin is just a peer-to-peer system of payment. That's what Bitcoin is. I pay you, you pay me. That's what Bitcoin is. Bitcoin, Bitcoin blockchain, you can track, oh, who owns, if you give me your wallet address now, or if I send you my wallet address, you can search it on the blockchain and see how much is inside my wallet, anybody's wallet, if you have the wallet address. So, but Ethereum now focuses on the running of the programming code of any decentralized application. I think we've already touched that. So now this is another important thing. We have coin, platform, token. So what are these? So coins, let's start with coins. Coins are basically cryptocurrencies that were created for the purpose of being used as an exchange of value. So basically money. So let's know that we might call them all cryptocurrencies, but not all of them are money per se. So some were created for that purpose of saying, oh, I give you my phone, you give me 1 Bitcoin. Do you understand? Exchange of value. So that's what we call money. Same thing if I give you my pencil, you give me 5 naira. That's exchange of money. So we have some examples here I put here. We have Bitcoin, Litecoin, Cardano. So platforms. Now platforms it can also be called blockchains or networks. They are the technology on which some crypto are built and they function. So for example, now like I just touched on Ethereum. Tron is another example. There are some other ones, but they are less known. So I just put only the popular ones here. And I know you might have heard of Tron, but I'm sure most everybody has heard of Ethereum. So basically what platforms do is that you can build your coin on this, your project, your coin, your project on this, and get it to function. So that those are platforms. Now, what is a token? Token are now those things you can build on these platforms are usually what you call tokens. So you have Binance Coin, which is Binance Coin is the utility token of the Binance exchange. So basically, if you want to get some work done on the Binance exchange, you give them Binance Coin, they accept it, and it's valuable for that purpose. So it's valuable for that purpose. So you have Binance Coin, then Chainlink. I know Chainlink has been the rave for those who have been monitoring the cryptocurrency market. Funny enough, I'm not really sure what it does, but maybe in another class would really look at it. So those are tokens. They're digital units issued on the blockchain. So there are different types of tokens. There are some that are used within just an ecosystem. For example, like the Binance Coin I mentioned. Many exchanges have their own coins now. So for example, if I hold Binance Coin on the exchange, I can get lower fees. I can use it to pay for fees instead of using my crypto to pay for fees when I trade. So so those tokens, they only usually have value within a very specified, very specified purpose. Do you understand? So for example, BNB now Binance Coin might not really be worth much outside of the Binance exchange. Same with Chainlink, outside of its own this thing. So, for example, now, and remember what we talked about platforms. Binance Coin was originally built on Ethereum platform. Chainlink was built on Ethereum platform. And we also have now let's move to stable coins. So stable coins were a very important innovation that needed to happen in cryptocurrency. So stable coins are a type of cryptocurrency that they are designed to maintain a stable value. So rather than experiencing price change, cryptocurrency, I don't know if you've ever looked at the market, you always hear, oh, there was a time Bitcoin was $4,000. There was a time it was $1,000. There was a time it was $20,000. So all that volatility made some people not to really like Bitcoin and other cryptocurrencies. So people now created what we call stable coins. So what stable coins are is stable coins are things like we have USD Theta. So they are attached to the value of, how do I say this now? They're attached to the value of something. So for example, Theta, USD Theta now is attached to the value of the USD. So one Theta is equals to one USD. That's the way it's done. Also have this one too, is also similar. This one is also similar. So okay, this I made an error on this slide. So this should be Theta Gold. So Theta Gold is also another cryptocurrency, but what does this one? What Theta Gold is attached to the value of gold. So one gold, I don't know whether it's gold bar now, or I'm not sure of the one gold bar is equals to one Theta gold. So even most of this now, for example, USD Theta built on Ethereum platform too. It's also on the Tron platform. It's also on one other blockchain like that, which I can't remember right now. So I don't know if we're able to follow. You can see how all this can interrelate. So coins for money, monetary purpose, platforms are, they are that technology on which you can build your coin or build your application or build, you know. I know there's so many things now that even actually, especially I really love platforms because they allow people to be able to build something. So I can wake up tomorrow, gather some people that know how to code and say, oh, I want to start my coin tomorrow. Like, and we can get it done and that's possible because of these platforms. I don't need to start building all the technology from scratch. I can just get that done by leveraging on an existing platform like Ethereum or Tron. So that's what that is. So we'll still come back to this maybe when we have open our question and answer segment. So let's move on. So now let what really makes crypto have value? People shout crypto up and down. What's happening? What makes it have value? So cryptocurrency transactions, they are irreversible. So once I send you, if I have 5 Bitcoin, I send David 2 Bitcoins. Once that transaction is confirmed on the blockchain, which is a ledger, it cannot be reversed. Do you understand? So, someone cannot say, oh, I want to give you money and I want to collect it back. No. Once you spend the money, is spent. Then pseudonymous. Pseudonymous is just meaning the accounts and transaction on Bitcoin are not really connected to a real world identity. So Bitcoin is just a series of 30 character wallet addresses. They have various numbers, various letters in them. I don't know if you've ever seen one. So actually now there are more sophisticated platforms that can really analyze that ledger, what we call the blockchain, and track some some transactions. But it's not really, it's difficult to do. So you can keep your money, and maybe your government, if you have an oppressive government, let's say a military government takes over today, you can keep your money in Bitcoin and they don't really know what you own. It's not like BVN now. Now today we have BVN. With BVN, any an organization like the EFCC in Nigeria now can look up your BVN and get all your bank accounts and your balances and everything and block it. They will need some permission, but they can get that done. You understand? So also it's fast and global. You understand? You can send money to someone in Russia within minutes. Like within minutes, you can send money to someone in Russia or someone on the other side of the globe or someone even in space, as long as the person has a computer. Doesn't matter. So, and it's really, really nice, and the fees are low. There are people who have sent millions of dollars and maybe spent $2 or $3 to send $1 million. If you send that kind of amount through the banking system of today, man, you would pay maybe at least 10K dollars in fees. So it's also secure. So far, the Bitcoin network itself, has not been hacked. Hasn't been hacked. So some exchanges, and that's what, and they used to scare some people. They say, "Oh, what about all the hacking that they hear about Bitcoin, blah blah blah." It hasn't been hacked. It's people's exchanges that collect Bitcoin that have been hacked, and those Bitcoins stolen. And that's because, so okay, let me talk about the private key. So Bitcoin has what you call a public and private key. So the private key is the only thing that can make you access the Bitcoin. So for Bitcoins that have been hacked, that private key is what allowed that hack to be possible, because the hackers got access to the private key. And anybody that owns the private key owns the funds. That's what Bitcoin is. So I wish I could go more into what that is, but we have little time left. So permissionless, Bitcoin is a permissionless system. You don't have to ask anybody to use. I think that's pretty self-explanatory. You just need to download the software. That's all you need. After that, you're good to go. So let's talk about investment. That's why most of us are here, right? So what does it mean to invest? What does investing mean? So investing is just simply, allocating resources, investing. I can say if I feel that the price of something is going to go up, and I buy that thing with the hope of selling it at a higher price, that's an investment. Whether it be land, whether it be a Barca jersey, maybe Barca won Champions League this year, and you buy that jersey, that Champions League final jersey, and you know that you feel, oh, this jersey one day, 20 years, I can sell from now, I can sell it. You have made an investment. So let's move on to the second point. So what is the main thing about investments? So it's the expectation of a return. So ROI is something what they call return on investment. So that's the core concept of an investment. That what can you get? And it's usually measured in percentage. It's like you say, oh, if I buy something now for 100 naira and I'm able to sell it later for 200 naira, that means I've made a return of 100 naira, which is 100%. You understand, of my investment. So now, what is the difference between trading and investment? Trading is a short-term approach to building wealth. So investment is more like a long-term approach. So for example, now I trade Bitcoin and other cryptocurrencies on a daily basis. So that what I just want to take, what I'm trying to take advantage of is the changing in the price. I'm happy as a trader. I'm happy when the price changes up and down, and that's one of the reasons I trade more in the crypto market than any other one. It's because it moves so much. So any move up or down, I can trade it and make money. But investing is different. Investing is you're typically looking for the price of the asset to go up, and you're willing to wait 1 year, 2 year, 3 year, 4 year, 5 year, and maybe even more. So as you can see in the next point, goal of an investor, you want to build wealth over a long period of time, years, even decades. That's basic. So how can you invest in crypto? You can buy crypto on an exchange. You can become a speculator or a trader. That's one way of benefiting benefiting from the prices of crypto. So a speculator is basically someone who you buy something only for the reason that you think it's going to go up in the future in very, very short term. So that's what they call speculators. Those are people called speculators. Same thing. It's still the same thing that you call a trader. So investing in initial coin offerings. So initial coin offerings now are, I don't know if you've heard of an IPO. They're similar to an IPO. IPO is initial public offering. Initial public offering is when a company invests, is offering its shares to the public that, oh, okay, come and buy a piece of this company. Let's say MTN. I don't know if some of us can remember when MTN did their IPO. So if you invested in MTN's IPO, then you would have been maybe a millionaire by now, depending on how much you invested, or maybe if you invested in GT Bank. GT Bank too is one of the companies or banks that really had a good IPO, and if you look at the track record, you see that the thing has really appreciated over time. So now, if you contrast that with initial coin offerings, So what this does is you invest in the projects at the beginning. Any coin, like even at Ethereum, when they started with an initial coin offering. They told people to pay Bitcoin. You know, they gave them like like a business proposal and said, "Oh, this is what we're trying to build, and we believe it can be worth something in the future. So come and invest." You understand? So they offer you but although it's kind of different. Maybe I'll still touch on this in another class later because there's just a basics class. So it's basically it's like equity, but it's not equity. But we'll still touch on that later. So you can also become a miner. So I talked about miners. Miners are those that validate the transactions on any cryptocurrency blockchain. So if you're a miner, you get a reward for mining, and which is for each transaction block that you validate, you get a reward of the block reward and the transaction fees. So please, if you have any questions of anything I've said so far, you can add it, put it in the chat. We'll pick some that we can answer. We're already running out of time. We'll pick some we can answer, and we'll answer them. So signing up for airdrops. So what are airdrops? Airdrops are these are when a project, a coin is starting, and they want to encourage people to when you look at money, as I said earlier, money is only valuable when people believe it's valuable. So the more people own something, the more they believe it's valuable. I don't know if maybe you're following me. So basically what these projects try to do is they distribute their coins for free at the beginning of the project when they are not really worth much. But the more people hold those things, the more valuable it becomes. Because I believe, I believe it has value. You believe it has value. By the time 1,000 people believe it has value, it begins to actually have some value. So now let's move on to what's the key to profitably investing in crypto assets. And I think this is the most important part of this class, or it's really, really important. So don't be carried away by the hype. This is a mistake a lot of people make. And it's always when you are new to investing, this is what you really have to be careful about, especially in cryptocurrency and even anywhere else, even in stocks, even in any other markets. Don't be carried away by the hype. So some people that there's that tendency to invest, like I did in 2017, put all your money there and say, oh, because it's going up, I am going to buy. So always do proper research. Do your research into the coin. And the good thing is on the internet today, we have so many people that have done research. You can look up all those things and look at who is the person developing this thing, who are they partnering with, what are they doing, and some other things. Just don't just buy something because it's going up. You understand? And that's what I've people that know me, and that's what I always advise. Don't buy something just because it's going up. Do your research. Very, very important. So the next thing is risk. So one of the key principles of investment, trading, anything that has to do with you're looking is risk management. Anything that has to do in a financial investment, and even in life, you manage risk. Do not invest what you cannot afford to lose. So only invest money that if you lose it, it's not going to change your life. So the wrong approach now, for example, a lot of people really suffered during the 2018 crash of Bitcoin and the crypto market because look at what some really silly things some people did. Some people took out loans on their houses, mortgages on their houses, and used it to buy crypto. And they now bought crypto at 19,000, 20,000 when it was at its highest. And the price hasn't returned. We are praying it will return there, but who knows what's going to happen. They took loans and bought that thing at its highest, and they lost a lot of money. Some lost their houses, some lost their businesses, because you want to take a loan, you get collateral. So do not invest what you cannot afford to lose. Risk management is very, 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 very important. I can't overstate this. So watch out for scams. So as anywhere where there's opportunity, they are going to be scammers. Just know that. That's just a function of life. That's how life works. So, and a lot of people, and that's what drives them away from cryptocurrency. So, because of the nature of cryptocurrencies, that they are they are not anonymous, but they are, you can't really say who owns this wallet, who owns that, who owns this, who owns that. So, scammers love to use it. Scammers, hackers love to use it because they know that even though you can see the transaction of what the scammer or the fraud guy stole on the blockchain, you cannot, you understand, you can't really know, you will not see the scammer's name attached to the wallet address. You will not see anything. So scams are, there are a lot of scams that happen. So some of them, I'll mention some of them. There are Bitcoin mining scams. There are Ponzi scams. I don't know if anybody ever heard of BitConnect. Anybody ever heard of BitConnect? You can post in the chat. So BitConnect basically was a Ponzi scheme where, we all know MMM now. So basically MMM, but crypto MMM. You bring somebody in, you understand, you pay so amount of, I think they were collecting Bitcoin that time. You bring somebody in, and the way MMM works now, they will say you will go up on the table, you go up on the table, you go up on the table. But the funniest thing about BitConnect, the owners said this is a Ponzi scheme. The people that started it said this is a Ponzi scheme, and yet people still rushed to invest and lost all their money when the owners that said, oh, this is a Ponzi scheme, oh, come and invest. And some people carried their head to invest and lost money. So, like, what are you doing? So, this too is a very important part. Speculators like myself, so I'm even part of the people contributing to the problem. People, I don't know if you followed and if you came earlier or you've been here from the beginning, where I talked about the futures contracts. So some people now, like that futures contract, I do not have to hold Bitcoin to trade a futures contract. So I can make money from Bitcoin without actually holding Bitcoin. And that's what, in fact, the banks and the Wall Street, that's what they do. A lot of them, they don't still believe in Bitcoin. But although that's starting to change slowly, they speculate. You understand? So they trade all those futures contracts and things that will make them money on Bitcoin, betting on the price of Bitcoin, but they don't hold it. So what this is, I'm trying to say, is that a lot of what drives the price up or down is based on speculation, people trading activity, people just trying to make money. Yeah. So it doesn't mean the thing doesn't have value, but always try to find the real world utility of a coin before investing. Very important. So consequent to that point, a lot of coins and crypto are overvalued. Plenty. There are so many. You understand? So what you can do is, if you want to invest, try to find undervalued assets. And that's a lot of the research I'm doing in my group. And that's why we created Arrow Capital, to really educate people how to invest if you want to go the investment route, how to trade if you want to go the trading route. So the most important thing is avoid buying at the peak of the hype. So Chainlink now is one of the hyped coins, and it reached $20 recently, but I think now it's about $15. So some people now, because the thing has been rising, it rose from about $3 this earlier this year to about $14 within the space of a month. So that's a return of almost 300% within a month. So that's insane. But the problem with buying at the peak of the hype is you do not know when the price is going to collapse. If you buy at the peak of the hype, man, I can't say what will happen. Anything can happen. Markets are crazy. So we've come to the end. So this is my bonus section. So my 5 long-term crypto investment picks. Please, disclaimer, this is not investment advice. This is not investment advice. So these are just some coins that I feel are undervalued based on their utility. And I would, I hold some of these coins. I think I hold about 3 or 4 of them. I think Neo, I'm still looking to buy Neo. I used to hold Neo before, but I don't have it anymore. I'm still looking to buy Neo, but I'm looking for a good entry. So Ethereum, we've talked about Ethereum. Ethereum is, it's in fact, if there's one coin I can advise my grandmother to invest in, is the Ethereum. You understand? Second highest market capitalization, capitalization is the blockchain supercomputer. It can run smart contracts, do a lot of stuff. It's basically, I don't know, Ethereum is crazy. What it can do and what its potential is actually crazy. And it's what most of the cryptocurrencies you see today are just applications that are running on Ethereum. So if Ethereum itself should crash, everything don't crash with that. And waiting happen. So we have Neo. Neo is also called the Chinese Ethereum. So it's built by some Chinese developers. They when they saw Ethereum is having so much success and they felt they could build something to rival it. It hasn't really rivaled it yet, but it's because of the Chinese people now. The way all these things happen is because this is one of their own that built this platform. Most of them now want to build on Neo because it's written by Chinese people. The code the code is in Chinese and some other things, yeah. So that's they call it the Chinese Ethereum. Then Binance Coin too is one of my favorites. So Binance is an exchange. These are sponsors also that are this is the utility token of Binance Exchange. So it's only worth something because of how big Binance has gotten. So basically, you can use it to pay for fees. You can trade it. You can do so many things with it. In fact, in Asia, you can use it to buy things, buy coffee, pay for your groceries, do so many things. You can even use it to take loans. That's how big Binance has gotten. They started in 2017. They recently did their 3-year anniversary. You can use it to pay for fees on the exchange. You can use it to do so many things, but I digress. Litecoin is created to be the light version of Bitcoin. So basically, Bitcoin is about $10,000 or no $11,000 per Bitcoin. So it's always so difficult to actually use Bitcoin in day-to-day transactions. So the way people want to use it is more of like a store of value. Like the way you cannot just use if you have gold in your house, you cannot just use gold to go and buy chin chin or use it to go and buy Pepsi. Do you understand? So Litecoin was created to be that version of Bitcoin. They call it silver Bitcoin that you can use for day-to-day payments. So I think one Litecoin right now is worth about $60. So you can use it for day-to-day payments, buy your coffee, buy little things, day-to-day transactions. And I'll go around. This one is another very technical blockchain network. It's founded by one MIT professor like that. So it has a lot of improvements over even some of these coins here. And it's something I'm still researching in, but I feel it has its the price is very little right now. And I feel it's very undervalued, but I'll be publishing some research on it in the near future. So these are my picks. So I think we've come to the end. We've come to the end of this is the last slide. So now Q&A session is open. Sorry for taking this already past 8. So Q&A session, you have questions on you can either put it in the chat or put it in the chat or unmute yourself. You're free to talk. But I think we should just do it one at a time. So if you have questions, anything if you want me to go to the beginning of the slide, anything you want me to really explain, maybe what you don't understand, just let me know in the chat or unmute yourself and speak. Okay, Damilola asks, what is your take on a stable coin? Is it a good option to hold? Okay, so we have a video on Binance Savings, which we created. So basically, yes, USDT is actually a very good option to hold. I, along with so many of my friends and even my partners at ACTG, we hold USDT. In fact, that's where most of our funds are. Do you understand? The funds that we are part, Investment is separate. I have my investments in Bitcoin, I have my investments in Ethereum and some other few coins. But a majority of my funds or my money is in stable coin like USDT because of fluctuation. And we all know the FX problem we're currently having in Nigeria, where banks are limiting the FX you can buy, the rate is going haywire and everything. So there are a few Bitcoin, sorry, there are a few stable coins. You have USDC, you have USDT, you have even Binance has their own stable coin. Many other exchanges have their stable coins. So, but one thing you should look at is adoption. What do people use the most? And from what I know, the research I've done, USDT is the most adopted. So that it's because what adoption means is when you want to sell that USDT and get your naira back or get your dollar back or get something back, it will be easy because people are always willing to buy USDT. A lot of people hold USDT, a lot of people buy USDT. Most of the crypto are traded against USDT. So BUSD, Benson asked about BUSD or USDT. Well, within the Binance platform, BUSD it's is a legal in quotes tender, but I would pick USDT over BUSD. Within the Binance platform, BUSD is good for it, but outside of it, maybe not so much. Maybe as they get bigger, that might change. But that's what I think. So any other questions? Want me to go to the slide? This is the beginning. For those who came late, talked about Bitcoin. We talked about Bitcoin. Talked about Ethereum. What problems Bitcoin set out to solve. A brief history of Bitcoin from the beginning. Brief history continued. How the basic Bitcoin transaction works. How does Bitcoin work? Just recap. New kid on the block, Ethereum. What does Ethereum do? Ethereum is basically a supercomputer. What else? What else? What else? So, any questions? Do we have any questions? Bitcoin, Ethereum, what's the difference? Coins, platform, tokens. Yeah, I'm trying. Somebody's trying to speak. Yeah, good evening. Good evening. What's the name? Oh, Kenny. Nice to have you, Ken. Yeah, thank you. There'll be more. There'll be more to come, hopefully. Thank you. Do you have any question? Okay. Yes. Yes, it is a token within the Chainlink platform. But I'll be honest, I don't really know its purpose right now because most of my time I spend trading. So right now I'm making some time for extra research into what each of those tokens actually do. So I'll still post if are you a part of our community? Are you a member of our community? Okay, so you must have heard we talking about the research, altcoin research that's going to come up. So we're going to do that. We'll post it once it's ready. Okay. All right. Okay. 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 So let me see. Okay. 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 I'm trying to see how I can explain. Okay. So basically, what those mean is let me go to this slide. So what you can see here now. So you can see Ethereum, right? ETH. Are you with me? All right. Okay. So this is just is what they call a ticker. So it's called a ticker. So what it does is, instead of me saying Ethereum all the time, if I want to trade it, this is what I see. Do you understand? So each of those coins, so if you see Binance coin, it's called BNB. You see Litecoin, it's called LTC. So those are just what they call ticker. So even the same with it, I don't know if you've ever seen stocks. So for example, let's say you want to buy Apple stock. They don't put the full name. So the ticker is usually 3 or 4 letters. Apple now is APPL. That's the ticker. That's what they call it, a ticker. So that ticker now it's paired against something, right? So that's so for example, now you might have USDT. Let me see if I can exit this and type. Okay, create a new slide. So okay, you can you still see my screen? Oh, okay, awesome. Okay, so ETH, you see something like this: ETH USDT, right? Yeah. So what this means is this is the asset. This first part is the asset that you are trading. So that could be ETH USDT, that could be BTC USDT. You understand? So USDT now I've said is a stable coin that is pegged to the US dollar. You understand? You could even have BTC USD, which is US dollar. But this one now, USDT is a cryptocurrency, which is a stable coin. So what this means is, what this usually means is the asset you're trading is Bitcoin, but it is the price of the Bitcoin in this market is in US dollars. Do you understand? So usually what you see is you see something like this. So Bitcoin is around 11,500 right now. So one Bitcoin is 11,500. I don't know if do you understand? Are you able to follow? Or do I have to still explain? So the first thing you always see here is the asset. The other one is what you are going to pay to get that asset. Do you understand? So same thing for Ethereum now. Is I think about 400, right, or something, maybe 390 right now. So you have 390. So first thing is the asset that is being traded or bought and sold. Then what will you pay? The second one is what are you going to pay to get that asset? That's how those tickers work. So that's how they pay. So even there are some other ones where you might see something like ETH BTC, and you see maybe 0.003564. So what this means is you use 0.03564. I said so the first one, as I said, is the asset, which is ETH, is the asset that is being bought or sold. Then this is what you are paying to get the asset. So what that means is if I can use, if this is the current market price, I can use 0.3654. I can use 0.3654 Bitcoin to pay for one Ethereum. Do you get? And usually when the asset is usually quoted like per one, it's like one of Ethereum, one Bitcoin here, one Ethereum here. So it's 0.0 blah blah blah. I will use to pay for one Ethereum. So any more questions? Do you understand? Do you still good, guys? Yeah, you're welcome. Okay. Yes, yes. And you're buying the price you see is the price for one DOT. Okay, Damilola asks, can we get the slide and today's replay? Yes, I hope. Yes, yes. I'm currently recording right now, so you'll be able to get the replay. The slide, yes, I'll also share that too. So, any other questions? Any other thing? Any more questions? If there are no more questions, so we can close the session. Any more questions? So, okay, I think that we're good to go. Thank you all for having me and listening to my boring lecture or class or whatever, whatever you want to call it. So, thank you for being here. I really appreciate each and every one of you, all my G's in the house. Thank you, Benson, Diola. I see you, David, Amara, and even the new people from our community. Some of you I'm yet to know. Solomon, our good supporter. I haven't even heard your voice. So Ashraf, Joseph, Lai, Oga Lai. Lai is not active in our community. I don't know why, but thank you for being here. Thank you so much. So I will ask for you guys' support. So these things we're doing, we're able to make it free because of our sponsors Binance. So please, if you do not have a Binance account, you can help us, support us. We get a small compensation by a percentage of your transaction fees when you sign up with our referral link. There are also some rewards for you. So I even forgot to add. There's a currently if you sign up in this month, there's a $2,000. You sign up and make, I think, at least a few trades. There's a $2,000 prize pool that's going to be shared, but specifically to we who are affiliates of Binance, people in our communities. So if you don't have an account and you've been looking to buy some Bitcoin, buy some Ethereum or trade, if you don't have an account, you can create an account with this link and you'll be eligible for the $2,000 prize pool that Binance is going to share with people that sign up with our link. So that's that. I almost forgot that, but so let me let you guys know. So thank you for being here. God bless you, everyone. Any other questions? Anything before I close that off? Right. So it seems we don't have any more questions. So okay, I'll share the slides. So please don't forget to sign up, support us. We'll be posting some articles, videos. Help us watch, help us share, help us. If you like what we're doing here, share with your friends. The more traffic we get, the more we can do stuff for free. Because I won't lie to you, all these things, they cost time, they cost money, but we're able to do it for free because we have a sponsor. So thank you. So good night, everyone. Thank you for being here.